Welcome to Trading Lounge and the US indices for the 6th of August, and starting on the daily chart here, we're looking at this as wave 1 and 2 here, and then 1 and 2 here, and 3 and 4 here, and then 5 to here for wave 3, then wave 4, and then wave 5 here. I suppose it is possible if people have got counts of 1 and 2 and 3 and 4 and 5 to have wave 1 here and 2 here, but it does leave wave 3 to a bit short here. Now that can work with some of the indices, and if that's the case, then if that's 1, that would be 2, 3, 4 and 5 here, having a top here for this, like this wave 5 top here. It won't bother us too much either way because we'll be expecting a correction either way. So we just need to monitor that. I particularly like this particular count here, and I see this in in Australian stocks and US. This is just an Australian stock because it was just sitting there, but as you can see, it's really much the same count as the US stocks as well for a lot of US stocks are like this. I mean, this is an iron ore stock, and this is BHP in the US, so it's the same as well as 1 and 2 and 1 and 2 and 3 and 4. So it's and of course, when you think about it, all the products that are being delivered, in the supply chain, obviously coming from companies that supply metals and rare earths and so on and so on. So even though they're Australian stocks and we're further down the food chain, that's where it's a lot of it's coming from. So this is a pattern that stocks have basically in creating this S&P count here. Now the other situation I've got here as well, as I mentioned yesterday, there is a possibility that we could put wave 4 here, which would give us an extra wave to the upside. So let's just go in and pull this apart here. So as mentioned yesterday, if I take wave 4 from here, then we've got 1 and 2 and 3 and 4 and 5 coming up here, and we'll talk about this here in a moment, and we'll pull that apart. And then that would be the top here of wave 5 here, okay? Now, if I have to include, if we go, let's just say we have our 5 waves up here, and that's the top, and that's it, and then we make a new high here, then we'll need to use this as wave 1 here and wave 2 here, and all of these 5 waves here will just become wave 3. So we could copy this here and put wave 3 here, and then we would look for wave 4 and wave 5 for another move to the upside. Now, as I mentioned yesterday as well, is that I really just prefer to take the most conservative view of the count, because that way we limit mistakes, and as we find a top and then the top gets breached, we can trade that top and move up in the next structure. Okay, so it's just step by step, level by level, that we move through all of this. So in this picture here, just the takeaway here is this problem here of which wave 4 is here. That will give us an extra wave to the upside here. Apart from that, this particular move here, having as 1, 2, 3, 4, 5 here, finishing here, that's what we need to work on next. And there is a couple of little situations in here that can also that we need to resolve as well. So in this first instance here, from wave 3 here as an A and a B and a C here for wave 4, then we can look up as wave 1 here, back for wave 2, up for wave 3, back for wave 4, and up for wave 5 here. Okay, so we've still got another little, anyway, we'll talk about this in a minute. So in this case, we've got the same problem again here as well. It's possible to count this wave 3 here and have this wave 4 sitting here for this as well. So I'm just going to put this in here, and that would make this here as wave 1 with an A and a B and a C here for wave 2 here. So I might just blank that out here as well. So this is, we need to work through this problem here as well. So these are just stacking the problems up, but they're all solvable. And yeah, so there's another little wave in here that's possible, but we don't normally get an expanded flat within wave 1 and 2 here. But on the NASDAQ, as you may have seen before, if I can just bring the NASI across here, this move up here as wave 1 here, an A and a B and a C for wave 2, well, that suits quite nicely here, doesn't it? We can have a look at the NASI later, but so it's possible based on the NASDAQ that this can be wave 1 and 2 here for this. But as it stands at the moment, I want to have a look at the structure this structure in two ways. One, that we have it here as 1 and 2, and the other one is that wave 4 here. Our conservative view here is wave 4 here, and we got 1 and 2 and 3 and 4 and 5 coming up through here to finish off here for this. So we need to look at both of these patterns here. So let's go in and look at those. So in this first instance here with wave 4 being here, we've got wave 1 here and 2 here, and then we've got 1 and 2 and 3 and 4 and 5, a little bit hard to see in here, ABC for 4 here, and then we're moving up for wave 5 here. So wave 5 is 1 and 2 in here, and then we've got 1, 2, 3, 4, 5 in here for 3 and back for 4, and then we have 5 in here. So in this scenario, the most conservative one of all of them that we have, then we would see this market come down at this point. So if we were looking for a target, then the next high would do that. We'll pull that apart and have a look at that there as well. But in the bigger picture here, from wave 4 here, we've got 1, 2, 3, 4, and then we've got 1, 2, 3, 4, 5 finishing off in here, and we'll have a closer look at that. But that's just to point out where that is at this point. So I'll just see what I've got on the 15-minute chart, because we need to look at the other one here as well. So, all right, this is still another little count that I've got in here as well here. I'll just go back here to the 1 hour chart. So one of the problems with this as wave 1 here and 2 here and 3 here and 4 here is wave 4 really comes really in quite close to the top of wave 1 here for this. So that is a little bit of a concern here. So what I've done on that instance here, coming into the 15-minute chart here, instead of calling, we've got 1 here and 2 here, instead of calling this wave 3 here and wave 4 here, which I have in the other one, I'll just copy that. I'll just put that there. What I've done here is I've got wave 1 here, ABC for wave 2 here, and then looking at this as 1, 2, 3, 4, 5 for 1 here, and back for 2 here. And from back from 2 here, then from little blue wave 2 here, we're going up into wave 3 here. So let me just unfold that little 3 here. So 1, 2, all the way up here for 3, back for 4, and up for 5 to make this wave 3 here. So that will take us to 33.50, and then we'll have wave 4 here, and then we'll have wave 5 taking us even higher. So I've got it at 34 up there. I don't know if that's the case, but that would just be taking us higher. So one of the interesting things here that we can do, first of all, if you've got any long trades in the market, we've got our stop here now. So with this little structure here, from wave 2 here, we've got wave 1 and 2 here, and then 1 and 2, and then we've got 1 and 2 and 3 and 4 and 5 here for the third, fourth, fifth for the third, an A and a B and a C for the wave 4. The 38.2% retracement level is a little bit lower here, but the wave 4 of 1 lesser degree is sitting where that is there, but it could come down to this space here for this wave 4, so just be a bit mindful of that. and then we're looking for wave 5 to the top here. Now you remember in our conservative view that here is a top here in the of the fifth. That's the top of the fifth wave here in our conservative view, right? In our most conservative view. So let's just copy that, and I'll just put that there as wave 5. But I'll also just blank that out so we know that it's just an alternative. So what I was suggesting here is that this is an interesting space to be in right now, because we're going to revert back to the trading levels now. They're going to be helpful here. So we've got 3,000, which is a major level, and then we've got 3,100, 200, and 300. So that 100, 200, and 300, they're minor levels, and those three together make up group 1 here. So what we're doing here, we are at the top of group 1 at minor level. Now the next degree down in levels is the sub-levels. So in the sub-levels we've got 1, 2, and 3 here, 10, 20, and 30 that make up this level here. So this is also at 30 here. This is the top of subgroup 1. So we're at the top of minor group 1 and subgroup 1 here. And this is important because if we get support on top of this level here, then we can start looking at 3,500. That's the normal process. Now we know that the old highs are around the 3,400, which is also a Fibonacci number. So that 34 is going to interrupt us in getting from 300 to 500 at that point. So if we get support on this level here, then we're going to be looking at 3,500 with a problem at 3,400 because that's the old S&P high there. So what constitutes this here as being support here, as a tested support? Well, the next degree down, this one up through here. So if this becomes the support now, the tested support, the 30 here, 3,330, then we constitute that as support, and then we can go higher from that point. So in that regard, what we're looking for here, as I mentioned, this little wave 4 could come down to here somewhere. So I'm just going to draw that up here, but we're looking for that wave 5 up here, right? This wave 5 of 3 here. So if this comes back down here, and it'll come back to the wave 4s of 1 lesser degrees, wherever they may be in here, right? Or the 38.2. So if that holds there, if this one holds, that one's there. If this one holds here, then this one will hold here as well. Right, that's just the way the cookie crumbles. So what happened then is that if we were trading long, we would go here at that point. Because if the market's going to fail, then it's not going to breach this second high here. But if this is a corrective pattern here, then we're either going to be coming down here or we're going to be going up here into the next move up here. But what that does here, that gives us support as a classic trading levels pattern, which would be sitting on that level there. So the classic trading levels pattern, as you know, looks like this. So I'll just bring this across here. So if this is 3,330 here, so this particular pattern can happen on major levels, medium levels, minor levels, sub levels, and micro levels. So the arrival and the reaction and the first high above the level. So currently we've arrived at the level and we're having a correction at the level here, aren't we? So we've here we've got well, it's the same as here really. This is a nice example here too. So we've got the arrival, the reaction, the first high above the level. In this case here it's just sat there, so that's the variation of that pattern, which is this one here, the first variation where it doesn't come back below the level, but we still have that high and that high here to go long on in that case here. But I want to talk about this one here. So with this one, currently we're in here at the moment. We haven't sort of pushed up there above there yet, so we're here, we've got the arrival, we've had our reaction here, and we're looking for that first high above the level, and then we're looking for the ABC pattern. So that would be here the the first high above the level, which will be in 5 waves, and then an ABC pattern here, and we take this high to go long, and then we can bring it down to this one. But normally we can get a better position over here. Yes, you can go long here, but that's where the risk is. The money's in the turn, but so is the risk, because if it was going to fail, it would move back up to the level here and then drop from that point, and you've missed out the support. It's all about the support. It's all about the volume, basically. So in this case, we're looking for a move up, the first high above the level, and then a corrective move here. Now, in our conservative view, that's the top there, right? But I do think we're going to be going up further, but we have to acknowledge that this could be a turning point here, and it is critical because it's critical to this level, the top of minor group 1, and also of subgroup 1 as well. So it is critical. This is really important here, because getting support here will sever the order flow of this number and also this number, and then the market just starts to look up from that point. So remember that in normal instances from 3,300 we get support on this level. We start looking at this number here, the 500, the 5, which is the second strongest number in the market. 34 is, in terms of the trading levels, which is the Fibonacci prices as a price ratio here, the 34 is important. 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144 for the whole cycle. That's where Gann and Elliott meet. But 34 is an important number, and it is. But in this case, it's doubly important because it's the old high on the daily chart. So that's where the problem's going to be. But it's also a psychological finishing line. And I also need to say too is that if that's the old high, back over yonder before the COVID situation, then double tops are never the end of a bull campaign. So we've had that March move down into March here, then we've had the move back up. So that's the 34 here, the 34 here. Double tops are never the end of the of a bullish run. Okay, sure, they will react and dance around a little bit, but it's not the end of the party. So we'll just bear that in mind as well. But there will, we can expect a reaction there, so we'll see that. Right, so I think I've explained that reasonably sort of carefully there. What I also wanted to do now was just have a quick look at a few things. Now, this is a daily chart here of the Russell. Okay, so with the Russell here, I can see that we could call this the A wave here, just for thing, and then we can call this the B wave here, and then we could look at this as the C wave here. So basically an A wave here, a B wave over here, and a C wave down here. So in this structure here, an ABC correction would be the A wave here, the B wave here, then wave 1 here, wave 2 here, and if you've got a keen eye, you'll see 1 and 2 and 3 and 4 and 5 here at the top of the third wave, the fourth wave here, and the fifth wave here. So this finishing here can be the top of the B wave. Once again, double tops are not the end of the bull campaign, so then we'll see wave C here. The other way to count this, of course, is that we can look at this as wave 1 here and 2 here, then wave 1 here and 2 here, then the third wave here, the fourth wave, and the fifth wave, and the fourth wave, and a fifth wave. So a more of a bullish pattern to the upside here, which I think is the case, but we need to take it step by step. And if we just, let me find, this is the triple Q here, right? So in this case here, we can see a nice A wave, a little A, B, and C for the B wave, and down for the C wave here, making a new low here. Even in this case here, it doesn't have today's bar in it. This is just the trading levels charting program, and it's just the end of day. But wave 1 and 2 and 3 here, we still need 4 and 5 to go up here. So this is not completed. So we've still got days here to go with this. Let me just have a look at the comp. The comp is much the same as well, with the little A wave here and a B wave and a C wave. We know that because we've been looking at it like this here. So the wave 3 here, an A and a B and a C wave here for wave 4, and then moving up here. Now we can count this as wave 1 here and 2 here, but do I look at this as the 3rd wave and the 4th wave here and going up for the 5th wave finishing here? Probably not, because this one here has got 1 and 2, which is quite clear, and 3 here, so we'll still need 4 and 5. So we've still got further to go up here. We'll see that dance around the 11,000. This is the comp here, and this one here is the NASDAQ 100. So in this case here, we probably have 1 and 2 here, and 3 here, and 4 here, and 5 here for this. All right, so that's how that will sort of play out there. Just have a look at some of the other ones here. Just give me a sec. This is the S&P 400, and it's the same as well. So we can't, in this case, we can't call this an A and a B and a C wave down here, because this is in 3 waves here. So this is where it comes in that we're probably looking at wave 1 here, an A and a B and a C for wave 2 here, then up for 1 and back for 2 here, and then 1 and 2 and 3 and 4 and 5 is just the 3rd wave. So in this case here, we've still got the 4th and the 5th, then a 4th and a 5th here. So we've still got, this has still got further to go up in this case. The 400, we'll look at the 500 now just to compare them. So this one's, obviously leading the pack a little bit, but this is where we come down to our problem. Are we going to call this wave 1 and 2 here, which is probably the right thing to do, but as I mentioned, I just want to take when I look at all of this structure here, I take the most conservative view and then work with that and then build on that, and as I mentioned, we get less mistakes within all of that. And this is the SPY here as well, so yeah, it's trading above its highs. So anyway, just to recap a little bit here, let's just go back and recap this somewhat. So currently I've got wave 3 here and wave 4 here, and the most conservative view I can possibly take is 1 and 2 and 3 and A and B and C for wave 4 here, and then squashing 5 waves up in here for wave 5. I don't mind that. The wave 3 here is a little bit, wave 4 rather, just clips the top of wave 1. Can we live with that? I'm not sure, but anyway, we know how to deal with that top now. So that's the most conservative view. The other view here is looking at this as wave 4 and this is wave 1 here, which will make all of this wave 3 here, and which is probably the case. And once this tops out in here, we'll see this come up and hit that 34 there to give us that wave 5 over here for that. So I guess the other question here is that if I go, is our trade that we've got on there, or if you're currently long at the moment and all those sorts of things. So how does one resolve all of this here? Well, I think that I think it's always, it's a little bit annoying, isn't it? It's like, is it heads or tails? Do I take profit or don't I take profit? All these kind of things, it's just a yes or no situation. But I don't think we need to think like that. I think that we could always just take a balanced view of things. So I think that one way to do it is when we make a new high here, anywhere between, say, 33 in here and 40, followed up with a stop loss or whatever, but take some percentage off the table there, take some money off the table, and that way, whatever happens, you shouldn't, you won't be happy or sad. It'll just be a normal course of business, and then what you don't want to see, let's just say for a moment that, let's just say that the market just pushes, doesn't make a new low here, just pushes straight up from here. Well, then that's going to make that low here, this wave 4, and if I copy this here and put that there, that wave 4, then it will make this wave 4 here basically the same here. It will find support on the 20 here. So what you could do as a stop loss is that, as I mentioned yesterday, we talked about the number 2 within group 1. So once the market's been trading higher here and it comes down here, then, well, we'll get a bounce here. The worst that it can do is come down to number 5, 315 here, and then spike back up at that point, right? So that spike, then that becomes your stop at that point. And when that retests that, if it's going to fail that and reject that level there and come down and take out your stop there, then you've made the right decision, because if this number becomes the retested resistance, the market will be pulled down to the closest largest number, which is down here, which obviously destroys these wave 1s here. So that means that we've got that means that, you know, there's a change in trend at that point. So it's kind of good to know that little number 2 there. So just be aware of how that plays out there, because that's what you'll be looking for in here if you're going to hold on. And then if the market moves back up, you want to be going long just in here. Look for support back on here. You can draw a line through here, find different ways to move in. Yeah, don't get in here straight away, but look for support back on top of this level here, which is the top of subgroup 1. Now, just to refine things, and why I'm here and just yakking on a little bit, is you can refine this further, because when you get up to 3 here, all the 3s, now you're in micro group 1. So if that becomes the tested support, then you know that the 30 here that you're working with, the market won't come back to that at that point. So that number 3 in there is also really critical, because that's where you can start adding positions again. And then you would also add on top of 5, so 35 here, you would add on top of that there as well. So you want to build in whatever trade, you know, depending on however you approach things, you know. If you're trading, well, people are trading CFDs and, you know, mini contract futures from the CME and so on and so on. So everybody's different, got different amounts and so on and so on. But whatever you put on, you really want to get that to close to break even before you start adding to the next one. But if you're trading the levels, you really want to get your 3 or 4 positions early in the trend. So if you're trading from 3 here, the next level up is 5. Yes, there will be problems at 4 here, but we'll get through that. That's after we've had this correction here of the arrival reaction, first high above the level ABC pattern. Then all of this here will act as the accumulation process for the distribution process to the 50 here. So that's, you want to be going from this number to that number at that point. Yes, the 4 will give you a chance to take profit, to add new positions, all of those things, but it shouldn't stop the market at that point. We should see it higher at that stage. Alrighty, I've really waffled on here, so I'm going to exit. Thanks for tuning in. Cheers.